Hey, what's up guys? John here. We are stepping into probably the greatest buying opportunity in history. If you're a real estate investor, you want to invest in real estate. We're looking at what's happening in commercial real estate, residential real estate, house flippers. You're looking at all the numbers. And it's unbelievable. There's no way we don't step into something way worse than 2008. I'm not saying that to to get anyone scared, but you just look at the numbers. For example, just in office mortgages alone, you have roughly $100 billion worth of office mortgages that are set to refinance just this year. Another roughly $60 billion next year. And you have tens and tens and tens of billions of hard money loans, short-term loans, home equity lines of credit, all of which are set to refinance this year as well at a level in which we haven't seen before. Think about it, 2020, 2021, everyone was a house flipper. Every single ad was talking about some type of house flipping course. Everyone was so excited about real estate. That excitement is leaving the room very, very quickly as the national savings rate hits a record low, the cost of living a record high, energy prices are skyrocketing, and now people are becoming more defensive and concerned than ever before. In this video, I'm going to walk you through what's really going on. Please hit the like button. When you hit the like button, YouTube's going to share this content to educate more people about what's really going on in the economy. And if you want to fix your credit because you want to invest in distressed real estate because you know opportunity is coming, got to go to greatcreditfast.com. That's greatcreditfast.com. Schedule a free consultation, or you can give us a call today, and we can get a consultation right on the spot. 561-430-5900, 561-430-5900. Take a look at this. So, two office landlords defaulting may be just the beginning. Now, a couple weeks ago, a really big landlord defaulted on like $1 billion plus loan. And then after that, it's like every other day, a really big default's occurring. But when we look at the charts of what's really happening in commercial loan maturities, $91.7 billion this year. You have $58.3 billion next year and $47.4 billion in 2025. And how this plays out is nearly $92 billion of debt for those properties from non-bank lenders comes due this year. $58 billion will mature in 2024, right? But there's a very, very large percentage of these loans that are on adjustable rate mortgages, floating rate debt. The financing challenges are a particular problem for those real estate industries, given the proliferation of floating rate loans where interest rates reset more frequently, about 48%, so roughly half of all office properties that matures this year has a variable rate. Half, right? So you're talking about $47 billion of adjustable rate debt, where last year, the year before, when they purchased these deals, they bought it at a 3% interest rate. Now it's going to go from a 3% interest rate to a 7% interest rate. Vacancies went from where they were to where they are right now. People are working from home. People are outsourcing more and more and more. People are leaving their offices. Having an office is one of the most expensive, parts of running a business for most people. And as we start to step into this affordability crisis, I believe that vacancies are going to continue to rise, and it's not going to be a good situation for commercial landlords in office. But there's one thing that landlords can do to kind of offset some of these problems for the short term, but it's not going to be cheap. Landlords often have to purchase interest rate caps, which limit the payment increases when rates rise, and have also become expensive. So the price for a 1-year protection on a $25 million loan, which is a small loan in commercial, with a 2% rate cap soared to $819,000. So they have to put up $819,000 in cash for 12 months of protection for 1 year. In March of 2022, it was $33,000. So it went from $33,000 to $819,000. Right? We're going to start to see these people, they're not going to be able to write that check. And look at Blackstone, for example. Blackstone is stepping into a situation where they are going to be in very, very, very big trouble. So even for owners who haven't defaulted, the math has become more complicated. Blackstone's Willis Tower in Chicago, so this is a separate situation that I'm about to talk about in a second, has roughly $1.33 billion in commercial mortgage-backed securities and has seen monthly payments on that debt jump 300% in February from a year earlier. How is that manageable? 300%. You're not going to be able to refinance that. No one's going to touch that. It's either you're going to be doing a buy down, you're going to strike that check for $819,000 or $25 million loan, but this is $1.13 billion. So what are they going to spend? Right? $10, $15 million for a year's protection? More, right? More than that, right? And so there's no way people are going to be able to hold on to this and hang on. They're going to be defaulting. PIMCO saddled with $1.7 billion default in office meltdown. Blackstone, another situation, $562 million bond, European office buildings. They just defaulted again. This situation, Laguna Point falls behind on a $329 million loan downtown LA. Definitely not the spot you want to be, especially as a landlord. Last couple of years, as it's the cost of living is skyrocketing. Property taxes are skyrocketing. 500,000 people left California last year. It's the biggest exodus that California's seen in 100 years, right? California, an expensive market like downtown LA, is probably not where you want to be for office. But this is office and apartments. $329 million, they defaulted. And as that's all happening, we're starting to see more of these like zombie foreclosures. People just starting to walk away from their properties. It says the number of residential properties in the process of foreclosure is up 5%, right? But during that same time, what people are doing is they're stepping into home equity lines of credit. They're trying to borrow to try to make ends meet as the cost of living skyrockets. People are concerned that they don't have enough money to make it through the storm. So as they borrow, and I went through this situation myself many years ago, 4 or 5 years ago, I borrowed $250,000, and I think it was like 2.9% from a credit union in Los Angeles, and it was fixed for 2 years. And then it went from, my payment was really, it was nothing. It was like $300, $320 a month. It went from that, and then it went to adjustable. And when it went to adjustable, it went to like $700, $800. So it literally tripled, right? And then I just went and paid the loan off and got out from underneath of it. But a lot of people aren't going to have that ability to do so as their own property value starts to come down as the cost to borrow money skyrockets and the economy contracts. Most people's wealth is tied up into a belief that their home was worth what it was worth 2 years ago. And the market's changing now. And that, I think, is going to become a really big issue for a lot of these home equity lines of credit. As the total outstanding HELOC balance is now $336 billion. $336 billion. The pandemic fueled a huge increase in housing prices across the country, hitting a record high of $47.7 trillion in total value in the middle of 2022. This is according to Redfin. Homeowners are sitting on a lot more equity, with their ownership stake worth a lot more. Well, that equity was also based on a 3% mortgage. Sure, home prices are still really high in relation to interest rates, but how long can they stay here, right? How long will this actually last? Because if you look at the cost to rent, which in most cities might be $1,500, $2,000, $2,500, depending on if you're in an expensive area, right? If you were to buy in that same exact market and had 20% down at today's mortgage rates, your cost of shelter would probably be twice that. Right? So we're going to start to see a lot of people start moving into renting. There's no doubt about it. People just aren't going to have the option. It's tempting to tap this source, needs of funds, to renovate a home and pay off credit card balances. That's going to be a really, really big thing, paying off these credit card balances, because as Jerome Powell continues to increase interest rates, the cost to service credit card debt is going to go through the roof. So much more than people realize. So much more than people realize. That's why right now is the best time to get out of credit card debt. If you have credit card debt, you should really look into a balance transfer. There's like 12 or 13 different credit cards right now that will allow you to do a balance transfer at 0% interest, 0 fees for between 12 and 21 months. So it's a great way to get debt free. If you really want to achieve that, I would take advantage of some of these offers now while they're still available. As of now as well, property taxes across the U.S. rose $328 billion in 2021. Right? So people realize that as property taxes rise, people think, okay, well, property values are rising with it. But what a lot of people do not realize is that it will take years for these property taxes to come down to their real valuation if and when the real estate market starts to really adjust, right? I've had many people that I've been close with try to dispute property tax bills, trying to dispute the valuations. And I think we're going to start to see that more often than not. And so when you have a lot of people disputing at the same time, there's only going to be so many people working at the city that are going to be able to go through those disputes. If you're talking about a whole entire city trying to dispute and you have 10 or 15 or 20 people in an office, it's going to take forever. But look at what Jerome Powell says. Bank of America warns the Fed will hike rates to the point of pain. As experts say, there's no serious signs the economy is under control. Well, if you look at what they say, you look at the data which they provide, I don't believe any of it. I know you probably don't either. Looking at a 5% or 6% or 7% inflation, look at the cost of car insurance. Look at the cost of home insurance. Look at the cost of food, coffee, eggs, shelter, rent. Look at anything. Nothing is up 2 or 3 or 4 or 5 or 6%. Nothing. Everything is up 15, 20, 30% or more. So to say that inflation is 6% or 7%, I'm not sure about it. Maybe I just buy all expensive stuff and everyone around me buys all expensive stuff. But the reality is we don't. We just buy normal stuff just like you, right? And you're probably seeing the same exact thing. Sky high cost. And they say these job numbers are, we need to bring unemployment up to combat inflation. Look, they're running this economy into a real problem. This isn't going to stop in 2023. My belief, I'm not saying this to, get anyone concerned, but they took interest rates from 3% to 7%, and they're talking about 3 or 4 more rate hikes this year. Think about what that would do to housing if you're spending, you want to buy a house and it's an 8 or 8.5 or 9% interest rate on a 30-year fixed. If you were to buy a $500,000 house at a 9% or an 8% interest rate, you're talking $4,000 a month, not including utilities or maintenance or upkeep or property taxes, right? Like, there's no, how are people going to be able to afford that? People are not going to be able to afford it. So I think that if you are going to invest in real estate, you're going to see some huge investing opportunities. There's going to be immense opportunity to invest. But you're just going to need great credit. You're going to need cash in the bank. You're going to need a game plan and strategy. You look at it. You tell me, do you think Jerome Powell is going to start pivoting at this point? No. Maybe before elections in 2024 or around that time. But that's a long way off. That's a very long way off. And I don't know if they will even then. We will see. But in the short term, we're stepping into some real problems. And I think we're going to start to see a wave of situations unfold with commercial real estate. A lot of people don't realize this, but when you see these sky-high valuations and property taxes are supporting these valuations, this city benefits immensely. School districts, police departments, street services, they're fighting crime. They're doing everything that they can possibly do to keep the cities, intact. But if you have valuations that are plummeting and banks are pulling back all these properties and valuations fall, property taxes are going to go with it. And you're going to start to see cities, New York, Los Angeles, San Francisco, not have the funding to really be able to protect the citizens at the same capacity that they did with these record high valuations. What do you think? Drop it below, hit the like button, subscribe here, and subscribe also on my second channel. And again, if you need help fixing your credit, you want to invest in real estate, but your credit's not where it should be, greatcreditfast.com. That's greatcreditfast.com. We're getting incredible results for our clients. Give us a call at 561-430-5900 for a free consultation. And for short form content, LinkedIn, Instagram, and posting now on Twitter. And catch you guys on the next video.